Mortgage Nerd here with Forbearance Pitfall number 3. Guess what? You just waived, in your mind you waived 6 months, 12 months of payments. You didn't have to pay it. You're sitting back on a beach somewhere in your backyard next to a kiddie pool. We're on quarantine. And you think you're scot-free, that you're not having to make these payments. But every bank has their own rules. Every lender has their own rules. What if you are stuck with the one that says at the end of that 6 month or 12-month period, you have to pay it all back in one lump sum as a balloon payment? How, if you're not able to make your $2,000 a month, if that's what it is, for 12 months, are you going to be able to afford $24,000 at the end of those 12 months all at once? And I just said in the last video, you can't refinance during a forbearance because you're in forbearance and you don't have money to pay your mortgage. That's the real reason for using it. So how are you going to have money at the end to pay it all in a lump sum? Or what if the next 12 months you have to pay double payments? Instead of $2,000 a month, you're paying $4,000 a month. But wait, you could barely afford the $2,000 a month. That's why you didn't have money saved, which is why you're not paying your forbearance. So how are you going to pay that? You need to be very careful. You need to talk to your lender when you go into forbearance. You need to ask them, say, is this all going to be added to the end of my loan? Because that's the only way I can afford this. But you also need to remember, this is not a free lunch. The only way you should be doing a forbearance is if you have A, to feed your family, or B, pay your mortgage. You're going to feed your family. Go with A and get the forbearance. Be careful with your forbearance. This pitfall is a big one because you could end up in foreclosure if you don't do it right. And there's a lot of investors waiting for these foreclosures. Phil Stevenson, Mortgage Nerd, thanks.